So, Gene, I'm looking at my notes right now. You say the Fed's not as good of a friend as we kind of thought it was before. But I want to ask you, doesn't a good friend tell you the truth? I think Jay Powell's been very forthcoming. He's been transparent. Isn't that good friendship, at least on the investor side of this, because it can help you make your decisions a bit better?
No, and Frank, that's a great point. One of our bigger themes last year was the Fed goes from being a foe to a friend. They go from raising to cutting interest rates, and they cut by 100 basis points. This year, though, as we laid out 2025, we said the key thing about the Fed, they're a friend, but not a good friend. They're a friend because they're not raising rates. Definitely, they're not going to raise rates this year, but they're not a good friend because they're not raising rates. They're not going to cut rates as much as they said they would last year. So if you look at market projections, the Fed is actually following the market. Usually the market follows the Fed. So if you look at year-end projections, the market is saying 0 to maybe 1 rate cut this year. You look at the end-of-year rates expectations, it's around 4% or so. The Fed said in December they would cut rates twice this year. In September, they'd cut rates 4 times. But you've got the Fed saying, higher inflation, you have a resilient economy, you have uncertainty around the Trump tariffs. You take this together, plus recent Fed speak, Hammack yesterday, Williams yesterday, Powell yesterday, all saying that the Fed is likely on hold for a long time. Our theme for this year is none and done. No rate cuts for 2025.
Okay, you don't see any rate cuts coming. That's a very interesting thesis, because let's go to the new trade that you came up with. I actually enjoy acronyms. You came up with a new one. It's the SHAC trade. It's small caps, healthcare, AI, and quality. I'm a big fan of Shaq himself. By the way, Shaq, if you ever want to come on, open spot. But if you don't think there's any rate cuts, I do want to ask you about the S in that SHAC trade, the small caps. Doesn't that kind of break down the idea that small caps are going to benefit or be a big winner this year? Because the whole thesis there is leverage, with the idea that with rate cuts, they'll be able to take advantage of some of the leverage they have.
Yeah, no, that's a true point. And again, going back to Shaq, the NBA All-Star game is this weekend, and I love Shaquille O'Neal, especially when he came to play for my Celtics. And our best investment ideas are Shaq, small cap healthcare, artificial intelligence, and quality. Small cap we like a lot because you have cheap valuations. Yes, they tend to do really well when rates do come down, but rates are not rising higher. And we saw the small business sentiment survey that came out yesterday. The numbers were pretty good. Optimism and especially business sentiment has improved since we've seen the Republican administration come into Washington. We like small caps, again, valuation, some opportunities, and then you tie in a little healthcare. I think healthcare is really attractive given advances in biotech, personalized medicine, health solutions, and then quality. Quality is key. Buy quality names.
All right, so I want to stick with this Shaq trade theme we're in here. By the way, you mentioned healthcare. Obviously, healthcare is seeing a big rebound this year after it was kind of a laggard last year. But a key part of that in your thesis is biotech, which is supposed to benefit from rate cuts. But I just want to go back to the idea of AI. Isn't AI right now, the trade at least, very similar to Shaq on your Celtics? I don't think you have a good memory about this, but that Shaq couldn't perform the way it used to and was having a lot of problems just kind of getting going. It seems like the AI trade is very similar to that. If you look at the Mag 7 this year, it's not leading, it's lagging along with the rest of tech. So a lot of parallels to Shaq on your Celtics. Are you getting concerned about the AI trade and some of the thesis there, whether it's chips or the fact that this is a safety trade when we're not as clear about the Fed? Seems to be breaking down, at least in the early part of this year.
Yeah, you're definitely right. And please stop bashing my Celtics. They won this championship last year. But AI, within AI, artificial intelligence and automation, I think AI, you need to be very selective. I do believe, given the fact that we're seeing labor market uncertainty, immigration, you take this, especially those industries that are very labor intensive, healthcare, logistics, finance. I do think artificial intelligence and especially automation is going to be so very important. We are in a data revolution. We're getting so much data out there, but we need these large language models to go and sift through this data to make it much more productive for us to use. And I do think, yes, there's going to be some volatility. There'll be some uncertainty. There's going to be some questions in terms of, did companies spend so much money on AI? But I do believe there's some opportunities here still.